Welcome to International Conference on Entrepreneurship, Management, Education, Social Science and Technology 2021. I am Ruziah Latif and my co-researchers are Muhammad Azwan Maisa, Zabeda Zaharum and Ferry Nasrul. We are from University Technology Mara. Today, we would like to present our study entitled Risk Attitude, Product Knowledge, Self-Efficacy and University Students' Intention to Invest in Stock Market. This is my presentation outline. Stock markets have long been a favorite financial market segment to investors, as they provide liquidity, low transaction costs, and also stock market information is widely disseminated in the news and media that many other categories of financial markets do not have. Malaysian stock market has been growing over the years and is expected to continue its growth in the future. This provides investment opportunities for those who intend to involve in stocks trading. However, individual investors, or also known as retail investors, may react differently due to different economic settings and information asymmetries. Furthermore, they are considered as unique and highly heterogeneous in nature. The survival of publicly listed companies depends on their stocks being traded. This can only be achieved when new investors are attracted to invest in companies' stocks. Therefore, this study provides useful references for related organizations to know what are the factors that influence the potential young investors to be stock market investors in the future. As at first quarter of 2019, retail investor participation in Bursa Malaysia is recorded at about 25%. However, only 7.8% of Malaysia's population are retail investors. In order for a stock market to be efficient, there must be balanced participation from institutional and retail investors. In this case, university students with investment or financial study background are deemed to be future potential investors in the stock market. Their participation will increase the percentage of retail investors. Therefore, it is important to acknowledge the factors affecting their intention to invest in the stock market. The objective of this study is to determine the factors influencing university students' intention to invest in stock market. The research question is, what are the relationships do factors such as risk attitude, product knowledge, and self-efficacy have with the university students' intention to invest in stock market? Hypotheses that have been developed are as follows. H1. There is a significant relationship between risk attitude and investment intention. H2. There is a significant relationship between product knowledge and investment intention. H3. There is a significant relationship between self-efficacy and investment intention. Now, I will discuss some important previous studies regarding this topic. According to ICEMEST2021, intention is the measure of strength of an individual's willingness to adopt certain behavior. ICEMEST also states that intention indicates how much effort individuals are willing to put forth in order to perform the specific behavior. Many previous studies have used intention in predicting the investor's behavior as a dependent variable of behavioral intention model. Risk-taking is a behavior of individual commits himself or herself to an act with an unknown outcome. Individuals with a higher willingness to take risks are more likely to invest in financial assets like common stocks. Several studies have found that risk attitude has a significant influence on potential investors' intention to invest. Product knowledge in the context of this study refers to the ability to understand the concept of stock investment. Recently, Several relevant studies have reported a positive relationship between product knowledge and investment. Financial self-efficacy. According to Bandura, self-efficacy refers to an individual's belief in his or her capacity to execute behaviors necessary to produce specific performance attainments. Fan and Zeus 2014 and Asan Dimitri and Kausar 2019 reported that financial self-efficacy is one of the factors in determining financial decision-making of an individual. However, Sondari and Sudarsono 2015 suggest that self-efficacy has failed to show significant influence on intention to invest in the stock market. This diagram shows the proposed conceptual framework for this study, which consists of a dependent variable and 3 independent variables. This study used online questionnaire in order to get the data. The online survey was carried out among final semester students from 3 programs in the academic semester October 2020, January 2021 from Faculty of Business and Management UiTM Johor. This gave us the sample size of 510 graduating students, and the response rate was 88.82% with 453 valid response. The collected data was analyzed using SPSS statistics, correlation analysis, and multiple linear regression analysis was performed to find the relationship of the selected factors on the university students' intention to invest in stock market. Table 1 displays the characteristics of the 453 respondents that participate in the online survey. 70% of the respondents were female, majority age between 20 to 21 years old. More than half of the respondents are from a diploma program. Table 2 shows the descriptive analysis of the variables. Using 6-point Likert scale, all variables have mean above 4, with intention has the highest mean, which is 4.7075. Referring to Table 3, it shows the results for reliability of the scales. The Cronbach's alpha coefficients of all the variables were reported above 0.8, which indicates a strong internal consistency reliability. The relationship between variables were tested by using Pearson product moment correlation. Table 4 shows the result of Pearson's correlation matrix. All independent variables show significant correlation with the dependent variable. Knowledge shows the highest association with intention to invest. All coefficients of correlation between the variables are highly significant. Next, a multiple regression analysis was conducted in order to evaluate the relationship between the independent variables to justify the dependent variable. Table 5 shows risk attitude and product knowledge are significant and positively related to university students' intention to invest in stock market. Product knowledge is having the most impact upon the students' intention to invest. This suggests that university students rely on their knowledge of the financial asset the most to determine their investment intention. One remaining variable, which is self-efficacy, showed an insignificant positive relationship with investment intention. From the findings that we have discussed, we can conclude that H1 and H2 are supported, while H3 is not supported. Based on the findings, Securities companies and investment banks can tailor their business strategies toward attracting these young potential investors to play an active role in the Malaysia stock market. University students with adequate exposure on investment knowledge and improved attitude towards risk will therefore increase their intention to be future investors. That's all for my presentation. Thank you for watching this video.